January 4th, 2024. This is the S&P 500 E-Futures Mini on the 2000 tick chart using the NinjaTrader 8 platform. So I saw the charts today, right around 5:15 Pacific Standard, which is about right here, as well as 5:30 Pacific Standard, right about here. Two pieces of economic data came out, which is the non-farm roll employment change, as well as the unemployment claims. As you can see, when they announced the news, it didn't really move the markets all that much. You could argue that this caused this big sell-off, but I think, in my opinion, it didn't really do that much. This is what the charts look like today. I thought it was going to be kind of in a range, but it looked like it was more of a rally than sell-off. There weren't too many setups that I could mark that were high probability. I took a total of 2 trades, and they both failed on me. I'm going to go through the trades. After the second trade, I just kind of decided that there was 2 trades in a row that I failed. It was similar to yesterday where I took 2 trades, failed, then took 2 trades, and they won. But I didn't want to risk that. And I felt like I just wasn't in tune with what was the price action today. So I decided to just kind of stop trading. But I did kind of watch the markets, and I think going forward, because I noticed in all my previous records and chart videos, I've been marking a lot of setups that I thought were there, and I've been going back and reviewing some of those charts, and a lot of those setups that I thought were valid weren't really valid, and some of them were just noisy. So I'm just going to be more conscientious and more careful in how I mark my charts, just so I don't get confused, and I don't. As I get better, I can look back and see that those previous markings weren't actually very, very high probability or valid. Probably weren't even worth taking a trade on, just because context-wise, the setup wasn't very clean, the signal bar wasn't good, or maybe the signal bar was good, but the setup was kind of in the middle of nowhere. So I'm going to try to do a little bit better and more careful when I select my trades. This will also help prevent over trading, because if I can see it in real time that the setup wasn't that good, that should prevent me from taking these riskier trades that I've noticed in the past, at least few days. I've taken trades, and if they worked out, they were just kind of very, very lucky that they worked out. They weren't necessarily high probability. So I want to make sure I dial that in so that if I take a trade and it fails, I'll be okay with the failure, just because even though it's a high probability trade, there's still a chance that it doesn't work out. Whereas a lot of the previous trades I've taken were, I would say, more riskier than I realized in real time, just because I thought, I mean, yes, technically there might be a setup there, but it's not high probability because it's missing a key entry point, or there's something wrong with it, or maybe it was just very risky that I should have just avoided completely. So as you can see, there are less markings today just because I saw some trades, but I didn't mark it just because I didn't think they were good enough. But I will compare it against the other traders that I kind of follow, just to the more experienced than me, just to make sure if they did see something, I'll kind of make note of it. In the pre-market, it was just kind of consolidating and choppy. Then it had a sell-off. Now, again, you could argue that the economic data created this, but I tend to think that it was just kind of moving down on its own anyways. On the open, it wasn't much better. You just get kind of this choppy, gradual move up. I thought I found a channel here that has overshoot, and it consolidated in this range. Now, this is the first setup that I actually took. I convinced myself that there was a higher low here because I saw this as a high, also a potential fail breakout. So first entry long, second entry long. Now this doesn't take into account that I'm in a range, so I should have been playing range rules. So yes, if there's a second entry long here and it's at the bottom of the range, you could use that as another variable or another thing going for you to convince you to take a trade. But I didn't take this trade because I didn't like how the signal bar is set up. So it flashes up, and then when I saw this break down and move right up and close very strongly, I convinced myself that this is a higher low, which technically it is a higher low, but it is also at the top of the range. So this isn't a very safe entry. Plus, when this one picked up and opened here, bounced around, moved up, that's when I decided that I wanted to enter. So I entered at the high, and that was clearly too late. I needed to have been convinced to take the trade after this signal bar. Like, I'm not saying this is a trade that I should have taken anyways, But if this was a good setup, then I should have had my order ready to just jump in. I shouldn't have waited to watch how it played out, especially if it was super a good setup. So what happened was I did wait. It already made my scalp, and I put my order in, and I really should have just canceled the order and skipped the trade because the scalp has already been made. I did what I shouldn't have done, which was wait, which caused the prices to come all the way back, pick me up, and then close below. And since this is in the middle of a range, or this is actually high of the range, this isn't a safe setup. This is actually a second entry short possibility, which would have been an even better setup than the one that I was taking, which is the opposite side. And as you can see, it flashes down, takes me out. Now I thought if I maybe had my stop loss way down here, but then this is inviting a very big risk compared to the reward of 1 point that I was looking for. So it definitely wasn't good. Plus, as you can see, had I done that, kept it 1 tick below here, I would have been stopped out anyways and stopped out for a gigantic loss. So overall, wasn't the best setup. Then prices continue moving. I did see a potential first entry long, second entry long, or first entry long, bigger visual second entry long, but I noticed it was just making lower lows every time, so I wasn't quite convinced that it was going to pull back in safely to take a trade. Then here is where I take my next trade, and I saw it actually is a new low here. It's a first entry short, pullback, second entry short, flashes up, closes, and now I convince myself, again, this is a really bad setup, that this is a lower high. So I was thinking, okay, obviously its price are going to come back down based off of a very weak setup. Plus, it's pretty established that this is in some kind of trading range. So I would be selling into the lows. Even though there was an overshoot here, this could have been the actual true trading range. But I was so dialed in that I maintained this original trading range. And I thought, okay, well, obviously breakouts tend to fail. So I'm going to go short here, neglecting the fact that it's too late to take this low. It's too close to the bottom of the range. And this isn't a very good signal bar to go low, go short on. So I entered 1 tick below right here, as you can see. Now, what was I thinking? I was thinking I was going to push it for 1 point, and of course it doesn't. It starts reversing and flashes back up. So this is a very bad entry, very bad trade. Because at this point, I was looking back and there's only 15 minutes apart, still early in the day. I thought I could probably keep going, try to get back the 2 losses, but I realized what was I thinking here was way off. What was I thinking here in the second trade was also way off. So that just told me I needed to call it a day before I lose any more money. Today just isn't going my way. If the market cleans itself up, I do see some better setups. I still don't think I should be taking any trades. It's kind of a punishment to be more careful because I'll feel FOMO for sure, but it would be a good way to kind of reinforce the ideas to be more patient in my trades because this is definitely over trading and this is a good way to start me on the path to being triggered. And I probably may have taken a few more trades and made bad judgments. So I was already triggered here, kind of losing my cool here, and I decided that I should just stop completely. Stopping completely doesn't mean I didn't sit and watch the charts or watch other charts, but that just meant I wasn't going to trade the ES anymore, at least for the rest of the day. Prices then continue moving up. It falls into what I think is a channel, comes up, kind of pushes. I don't see any clean setups. There are second entries all throughout here, but they don't set up with good key entry point indications, or at least ones that I could find. Pushes down. I did see this as a new high. It's a first entry long, second entry long, but this isn't a very good signal bar. So, if I was still trading, pretty sure I wouldn't have taken this trade. They made new low, first entry short, second entry short. Same reasoning here. This is a bad signal bar to go short on. It's above the EMA. It's potentially pushing against the pre-market highs, but that still isn't good enough. And it just feels very congested in this area. The prices continue moving. It kind of trends upward on what I think is the shallow yellow channel going up, but it still doesn't have very good setups that I could find. I'm just sitting on my hands, and well, to be honest, I'm sitting on my hands anyways, but I was trying to anticipate if I was to take a trade where I would take it, as well as mark any setups that I could see. Prices then continue moving. It kind of creates a double top here. So the count resets. You have first entry long, but it's below the EMA. I'm not too keen on that. Comes back, and then it comes back down, makes a second entry long, but that's not very good. I'm going to delete this red channel right now because I didn't see it early on, and I kind of found it later. Then prices continue moving. It flushes down. It's pretty much staying away from the EMA. Fits in this nice channel here, but unfortunately, there's no good setups. There is a lower high here. Now, this is a new low. It's a first entry short, second entry short, pull up, and it creates a lower high. Now, this is after the break of this green channel. This green down channel, you expect a test of the lows down here. And the second, this lower high confirms the second entry short, first entry short, second entry short, pushes up, pushes back down, lower high. But I wanted this setup if I was going to take it closer to the EMA and have a touch rejection of the EMA, as well as it would have had a touch rejection of the pre-market highs, which would have just been another little thing to feel a little more comfortable taking the trade. But it kind of ended a little weak, so I didn't feel like it was worth it. Plus, you don't know that it's going to do that. I did suspect it might be in a range, something a little bit tighter here, but you don't know that for sure, so I had to leave it alone. Flashes down, it would have worked, but that's okay. Continue moving. Here I do see, since it's violating the range so many times, I decided to drag the range down to here. It was about right here at the time. Treated this as a little overshoot, pushes up, and it flashes back down, creates another channel. Looks like it's just kind of gradually moving down. I don't see anything safe that I like, no second entry longs or second entry shorts. Typically, you have a new high here. You can say this is a first entry long, pull back, breaks down, pushes back up, creates a second entry long. Now, I don't like this mainly because it's coming right into the EMA, which could act as a resistance, as well as the next piece of resistance would be this yellow down channel, the top of it, if this is a valid channel. But I don't know that yet, so if I was trading this, at least I saw it in real time, I decided like I wouldn't want to take this trade. It looked like it would have maybe been good enough for a scalp, but you don't know. Comes back down, breaks out, starts consolidating again. This is just junk right here because it's just so side by side. Look at these candles. They're like a lot of small bodies and big tails. So it's just hard to read, hard to really gauge. Prices then continue moving. It's very congested, moves out and starts flashing down. So this is where I actually see another setup. This is what I call a almost setup because it's a new low here. It's a first entry short, pull back, creates a second entry short. This is almost set up because this is a very good signal bar. Unfortunately, it almost touches the top of this green down channel, which would have had a nice rejection as well as a nice touch rejection of the EMA. So if that had actually happened, plus it didn't close this close to the localized bottom, then this would have been a worthwhile trade. But here, to take an entry, you're asking it to push down to this bottom and possibly through to get a quick scalp. And I wasn't sure that was going to happen. The prices can continue moving down. It just gets very congested. It's obeying the EMA until it gets to here. It flashes up, has an overshoot, makes one attempt up, pushes down. Now to look for a second attempt up is too late because it already reclaimed too much of this move back down. So you're just thinking it's actually going to continue down and test the lows of this green channel. At least that was what I was thinking. Breaks out, looks like it make two legs up. So it's after this break the channel, one push up, pull back, second push up. So now I'm thinking, if anything, price action probably wants to come back down and test this unless it falls into a range. When prices continue down, it does here touch the bottom. So it does push and exceed. So that was kind of cool to see it play out, except there was no clean setup that I could see or feel safe with. Prices then continue moving. You do have a new low here, first entry short, second entry short. This is a decent signal bar for second entry short, and it is the break of this green channel. So it broke out, made one attempt up, and I don't know if it's going to make a second attempt up, but this was a relatively decent signal bar. I wanted it to actually touch this, and the thing that was also holding me back is I'm coming off the lows, so I'm shorting into the lows of the day. Now, if this entire setup were a little bit higher, then it might have been worth considering, but it already went down, created a new low. So now I'm actually asking it to come back down to test the lows again, just to validate this green down channel needs to reach a new low. It could or it could not, but I needed more than just what I was seeing. So I needed actual touch rejection of the EMA, and I didn't get that. So just watching this, you probably would have gotten a scalp out, and prices continue moving. It kind of pushes up again now. There's a new low. It's a first entry short, second entry short. There's no setup that I can find. Here it creates a new high. It's a first entry long, pullback, second entry long. Here, the second entry long looks like it's about to fail. So if I were to take this trade, keep in mind that the overall bias was going down. And it was later in the day, about right now, that after this move was made, I found there was a potential trend line here. So I thought, hey, there's actually some kind of potential trend line here. Maybe there is a channel. I wasn't too keen on the lower part of the channel, so I was thinking more there's some kind of resistance here. It looked like it was touching, not the cleanest, but close enough. So that would have been enough, I think, validity or enough reasons to take this trade. So I thought it was a possible trade because the break of this green channel had an overshoot here, pushed up once, came down, pushed up a second time, looked like it's going to fail. So I would have taken a short one tick below here or at the same lows, hoping for at least a scalp before it hits the bottom here, which I think it would have, and definitely before it hit, I would have exited before it hit down here. So I would have put an entry right here at the lows, and it's debatable whether I would have gotten filled or not, and the trade would have been made. If it did take it one tick below, it would have most likely gotten filled. Then, of course, it's moving into the last 10 minutes of the day, which is, it just a lot of price action happens because people are closing things out. And it closes into prices move into the close. So, as I said, I didn't mark too many just because I'm trying to clean up my thinking and not over marking things, because when I do that, I think I start creating trades that aren't there. And I've been looking through my historical uh, trades or just my journaling and my records, and I noticed I've been marking a lot of setups, and a lot of them, when I compare it to other traders that are way more experienced than me, they didn't mark it or they just didn't even see what I saw, which is telling me I'm fabricating trades or fabricating setups, which is dangerous. So I think it's better for me to mark trades that I know or feel very strongly about that are actual setups as opposed to just marking everything I see. Because when I mark everything I see, it just creates a lot of noise and it confuses my future thinking into, because sometimes those random setups that aren't very clean work out, and that actually slows down my progress because I start believing in the future something similar is an actual trade when it isn't. And I think that's what's one of the things that have been holding me back. It's just too eager to trade and not being patient to wait to make sure prices are moving to where I expect it to move. Instead of just reacting, I think I need to have a better plan. So pretty enlightening today. Two failed trades today. Hopefully it gets a little bit better. So hopefully that was helpful.